3AC, the downfall, one of the biggest crypto Web3 venture firms in the world, is facing bankruptcy. We've got Celsius, the so-called crypto bank, also hiring advisors for bankruptcy. And also in the last 2 or 3 months, we've had Terra Luna, one of the biggest, most trusted stable coins, go to zero, as well as a top 10 crypto project, Terra, also going to zero. Crypto bear markets is not new. This has happened 5 or 6 times where crypto has gone down more than 50%. Currently, Bitcoin's down 70%. That's not what I'm worried about. What I'm concerned about is the ridiculous money management by some of the biggest crypto institutions, so-called crypto banks and projects in the space, being so levered up in already a highly volatile and risky asset class, losing not only their own money, but users' money. And I'm really passionate about this because here at Collective Shift, we're all about trying to help people navigate this space, educate them, bring them into crypto. But this shit is ridiculous because this hurts crypto in the short term. People have come in, they've bought UST, they've stored some of their money in Celsius, and it's all gone to zero. They can't get their money out. What sort of industry are we creating when we're creating these so-called trusted entities that are so levered up? There's no different in the real world. They're no different to the TradFi businesses, no different to the banks and institutions that we've all moved to crypto for. These are the same people that are now doing the same thing. And it's very, very frustrating. So I'm going to give you the actual TLDR. There's a lot to unpack here. So I've got some notes. So apologies if I've looked at some notes as I go through this because there's a lot to unpack. But I'm going to give you what you need to know in the next 10 minutes. It's not going to be a mumbo jumbo. It's going to give you everything you need to know, actual insights, and what it means for you and what it means for crypto. So 3AC is one of the largest borrowers in the crypto space, and it's reported that they are in debt of somewhere between $1.5 and $2 billion. At the top of the peak of the bull market, they had over $10 billion of assets under management. And what they've done is basically taken loans from other businesses. They're a VC firms. They invest into tokens. They invest their portfolio is pretty good, right? They made a lot of investments, but a lot of those tokens are locked up. So they can't get access to those tokens, right? And basically what's happened is that they've come out and say that potentially that they've been fraudulent and unconfirmed reports of false diligence reports, and lack of transparency as actually what's going on behind the scenes. So these guys have had a massive reputation. The 2 founders are on Twitter and probably one of the most trusted VC firms in the space. So they've been reaching out and actually getting loans from other people. The biggest one was Voyager, lent them $600 million in unsecured loans. And what's basically gone on is that 3AC's taken that money to try and get themselves out of the hole. But instead, that's actually just dug themselves even deeper. So some of the DeFi projects, they basically were managing people's treasuries. So like some of the DeFi projects were giving their treasuries, giving their ETH to 3AC to manage. And basically they've lost that money. Miners caught up lending money to 3AC. High net worth individuals wiped out as they invested in 3AC. And Celsius also had exposure to 3AC. So what we see in this space is like, let's say I went to the bank and I took a loan from a bank, a few $100,000 and I can't pay it back. Well, I'm the one that's screwed, right? Because I need to pay that back. And it's only a small amount. When you're loaning $600 million and upwards, you're not the one that gets screwed the most. The person that loaned you the money gets screwed. Everyone's screwed. So this is the impact that's having. It's like it's a domino effect, right? If 3AC can't pay back Voyager, that's a $600 million. If Voyager can't pay that back, then their investors and their customers aren't getting paid, and it's this domino effect. So that's why we're saying Celsius block withdrawals. We're seeing Voyager basically send a default notice to try and get their money back, but they're not sure if they're going to get their money back at all, because all of these institutions are now facing bankruptcy, and it's a domino effect. It's clear that they've seen hugely poor risk management, over-leveraged trades, some of the largest deleveraging that we're going to see in crypto play out. There's been so much liquidity piled into this space over the last 12, 24 months with the money printing and everything that was going on. Crypto sucked it up, and now there's going to be a complete deleveraging of the complete nonsense that's been going on in this space. Now, how did this get so bad? Well, 3AC took this money, took this capital that they raised, and they made this money and took loans. What they did was they invested into more highly leveraged plays. So they had a huge investment in Luna, which they took a big hit. They also invested in GBTC, which is the Grayscale Trust, So they were investing at a premium, and then basically trying to trade and make a difference on between the premium and spot. Then GBTC went into a negative play. So they actually bought this Bitcoin, let's say like $30,000, and now it's priced at $25,000. They can't even sell the Bitcoin at what they bought it for because they're trading GBTC. Then they also bought ST-ETH, which is the future staking ETH that will one day soon be transferable for ETH. And the founders thought that the ST-ETH would be priced at similar price to ETH, but it didn't. It's fallen way below that because right now you can't trade that back for ETH prices. So that plus they also faced $400 million of on-chain liquidations as the prices of crypto came down. They got margin called and got completely wiped out. They also have uncollateralized loans from major crypto funds as funds sending them money. So high net worth individuals, companies, anywhere between $1 to $2 billion worth of debt from these loans, it needs to be paid back and they can't. So the knock-on effects from here is mind-boggling. We've seen Celsius had to block withdrawals. We've seen Finblocks raising money, from 3AC to try and issue a withdrawal limit. You can only withdraw $1,500 a day. DeFi protocols that gave their money to 3AC to manage their treasury now, basically insolvent because they don't have their treasury anymore. And the founders have completely ghosted everyone. They're not even replying to their own team. They've completely gone off. They've deleted their Instagram. They're not posting on Twitter. They're just completely fallen off the face of the earth. Now, in the non-crypto world, we've probably seen governments and banks and institutions come in and try and bail it out, but that doesn't happen in crypto. We are seeing something like people like FTX and Sam Bankman-Fried trying to step in and provide loans to keep these players afloat. Whether that happens or not, I don't know. But the actual takeaways here is basically we're seeing one of the biggest deleveraging events in crypto history. Not only 3AC, we're seeing Celsius, we're seeing UST and Luna. There are so many forced sellers in this space trying to cover their liquidations. People that are trading long and it's going down need to force sell their assets to pay things back. And we're also seeing 3AC, one of the biggest trusted VC firms in the world, potentially being brought down for criminal actors or committed crimes. So a lot of stories still to come out, a lot of more information to come out as this gets to court, but I think we could see more downside risk to crypto markets, especially altcoins over the next few months, as a lot of these altcoins actually gave their treasuries to some of these bigger players that are now being liquidated. And as these players go through bankruptcy and having to force sell their tokens when those tokens get unlocked, they're going to have to force sell on market as soon as those tokens come back at goodness knows what price to pay back their liquidators. We're seeing a maximum pain right now, and I think this could be drawn out as time plays on. And the other thing that's been super frustrating for me is just honestly the lying that's been going on. Like the Celsius founder came out a couple of weeks ago, nothing to see here, we're all fine. Your money's safe. Basically, nothing to see here, we're all fine. And then again, 2 weeks later, Celsius are completely not posting anything. You can't withdraw your funds. Apparently, he was the founder of Celsius was found trying to get out of the US and blocked at customs trying to get to Israel. It seems he's fleeing the country. It's just honestly really sad, and the bad actors need to be washed out in this bear market. I think we could see a lot more harsher regulation, which honestly I think is good for the space as long as it doesn't press down on the new technologies and the new projects trying to stifle regulation. We don't want that, but we do need regulation and transparency, especially from these bigger players that seemingly are falsifying their reports and just mismanaging funds. Like, these are the guys that should be leading the way. If they're not doing it properly, how the hell is the retail guy supposed to be doing it properly? Actual takeaways for you is like that the short term could be choppy. I did a video on why you shouldn't short the market now. We're already down 70-80%. I would not recommend shorting the market now if you don't know what you're doing. I would be prepared though for choppiness and short term volatility in the next few months, because this is a huge unwinding and deleveraging of assets. We could see crypto sort of chop around this $20,000 mark for a little while. This is probably some of the worst news I've seen in crypto in my last 5 or 6 years. So I think we're going to see this regulation come in, which I think is good for the long term. But again, it's going to be pretty painful in the short term. And I'd be cautious about having any money in any CeFi, any exchanges right now. I'd be getting that money out. Like we've said so many times before, put that money in a Trezor, a Ledger, get it in cold storage. If it's not your keys, it's not your wallet. And unfortunately right now, you just can't trust anyone with your capital. I'd be putting that straight into my ledger. I've never put money in some of these C5 products, but I think for now it's best to self-custody and look after your capital. So I hope that's been helpful. If you want more links, I'll add some links to some tweets and some different posts in the comments below. We've covered this in our newsletter. We've covered this for members. It's been a warning for us for a long time now, but I hope that's sort of just like giving you a brief overview of what the hell's going on and what it means for you. If you like this video, please like and subscribe. It really helps us out. And leave a comment below. Let me know, have you had money caught up in Celsius? Have you had money caught up in any of these other projects, 3AC? What do you think about the space? Let me know in the comments below. And if you like more premium research and analysis, we do this daily with our team of analysts. We do on-chain, fundamental, technical, sentiment analysis. We've got portfolios you can look at, a bunch of amazing free and paid premium content. You can head over to collectiveshift.io and a link is in below. You can get a free trial for 7 days. So check that out. My name's Ben. Hope you've enjoyed, and we'll chat again soon. Thanks.